Hello, hello. I think we are most ready to start. Okay, so coming up. Well, we did prepare for you guys today an agenda. There's a few topics we're going to be approaching regarding Forex, right? And I will show you here what it is. We're going to talk about what Forex is exactly. It's important for you to understand which product you're actually trading, how to trade it, who do this, who trades Forex in the real life, all right? And availability, when it is available to you, because it's not a 24/7 asset. Also spreads, that is important because this is the amount of money you're going to be actually paying to trade this asset. And pips, we're going to talk about pips because they are the measure of how these assets moves. This is how we set our targets and how we count our profitabilities or losses. Also, risk management tools. We can learn how to set our stop loss, take profit, and then also the risk and the possible positive outcome you can get from trading this asset. Then, by end, we're going to talk about overnight fees because this has no expiration. So there is a small fee you have to pay to carry your position during the days. Okay? Everybody can hear me? Everything okay? Very good. Okay, we're gonna start now. By the end, please don't forget to stick around because if you have any questions about this webinar, you'll be able to write them down on the chat. We're gonna select all of them and we're gonna talk in the end, okay? So stick with me. I know it can be a little bit long, but it will be worth it. So let's go, guys. First of all, what is Forex? Okay, here we have a little example. Forex is the ability that we have to exchange one currency to the other, right? So we also talk about them everywhere as FX or foreign exchange. Then we can ask yourself why we do this. Because the main idea here is you buy a currency at a predetermined price. So you see the current price, you buy it, and you speculate either it's going to go up or it's going to go down, it's appreciate or depreciate in time. And then when you get your positive outcome or it is where you want, you can sell it and take your profit, all right? In the other side, you might ask, who is trading this asset? So basically, everyone is doing exchange. We have governments and the banks and the institutions. You have hedge funds, investors, and retail traders as yourself. All right. And you can think about it very lightly when you want to go for vacation. Let's go, you're going for Miami this summer, you need some US dollars. So basically, you can go to your bank and you exchange your currency to dollars. You're buying your dollars and selling your currency. Just some small break. Everybody's able to hear me, right? I've been seeing some comments about sound. Just make sure you have your volumes up. Very good. Let's continue. And a small fact is that foreign exchange is the most liquidity asset on financial market. All right. So there is more than $5 trillion being traded every day. It's a lot of money. Yeah, I know. So now we're going to talk about availability. This is important for you. If you have time, please take a screenshot. All right. We have here the different schedules for summer and winter, and this is the main currencies being traded. So you can see then AUD, JPY, GBP, USD, they have slightly different time zones. And why this is important? It's because when the markets are open in these countries, there are higher volatility. There are transactions going on. So you can take a screenshot of this, have on your desk so you know when the markets are open and where, and trade in a good strategy. Now, important, let's learn how to read a currency pair, okay? A lot of people talk about base and quote. We're going to learn what it is. We have here an example of Euro USD, okay? One of the most famous pairs to exchange. And as you can see, Euro is the base because Euro comes first, okay? As it comes first, all currency pairs, when they come first, they are the base. Then you have the quote, which is the USD, okay? Remember, base first in any pair, quote always second in any pair. We also have some facts that frequently the quote is called PIP currency because your results are being counted regarding the quote. Then you have the idea, again, that your unrealized profit or loss is being measured in this. And spreads also being displayed to you in the quote currency. The platform is doing this automatically for you. And you can see here that the idea is that you have a base being exchanged on the quote. So it means that one unity from the base have this exchange rate on the quote. For example, in this case, Euro USD is equal to 1.1901. It means that 1 euro can buy 1.1901 USD. Okay? Terms. This is about economy. This is interesting. We have here the idea of what is a major currency and major pairs. So if we talk about major pairs, you're always going to have USD on one of the sides of the currency pair together with any minor. Okay, minors are pairs that are big economies as well. So these assets are usually the most traded ones. And you have here some examples. We have euro dollar, again, dollar Japanese yen, sterling dollar, New Zealand dollar, USD dollar. So you can trade all these assets at major pairs. They are massive liquidity because there's a lot of transactions going on between them, okay, all the time. It's too much money going from one place to the other. And they usually have lower spreads because they are popular and because there's a lot of liquidity. Then we're going to talk about minors. So minors, easy to understand. We just exclude the US dollar, okay? And we get together all the big economies such as euro, sterling, Japanese yen, and we combine them together. If you have a big economy without USD, you're going to have a minor pair. And then we have also exotic pairs. They are interesting because this is together a major pair, a minor pair with a developing economy. Okay, usually they are more volatile because there are less liquidity and they have higher spreads because we're going to discuss spreads in a second, but you can see here, for example, if you get together with an economy you really know well, you can try to find this pair such as euro, Turkish lira, or Japanese yen, Norwegian krone, and you can have nice trades with these pairs, all right? So I told you we're going to talk about spreads. It goes on your pocket. You have to understand what it is, right? So basically, spreads are going to get technical now. It's the difference between the bid and the ask price. And what is the ask and the bid price? We're going to get there. So basically here we have example for you. You have 1.1855 as a ask price and a bid price of 1.1851. Okay, good. What happens is that this means that the spread is 4 pips, or if you want to see 0.004 USD. This is how much you're paying to open this position. Okay, why we have this fee? Again, is the fee from the broker to be able to give this asset to you. And then you can ask, okay, but I see different assets and the spreads from them are different. Why is that? Well, if a currency pair is not very popular, the spreads can be higher. We need to charge you a higher fee to be able to give it to you. Okay? Then, if it's less competition as well, let's see, I'm the only broker offering this pair. So I can charge you more because there's no other people giving you this pair to trade. In the other side, if the liquidity is very low as well, and then if the volatility is too high, so the range of price goes up and down very fast. All right. To finish up with ask and bid price, just so we are very, very clear on this. The ask price is at which the broker is willing to sell a currency to you. So if you want to buy, I will sell it to you with this small fee. So basically, you can see here that every time you're going to go buy a position, okay, you're going to go long. You're going to start your position from ask price. And this is counted as base, okay? So long positions, you start at ask and you will finish it at bid, right? You see here, very good. Everybody's okay? Enjoying it? I hope so. Keep writing down your questions so we can talk in the end, all right, guys? Don't forget. Then we're gonna see bid price. Bid price is the opposite, is at which price I am as a broker willing to buy a specific currency pair from you since you're selling it. Okay, so it's a short position, you're selling a currency. This is the price I want to buy it from you. You can always sell your position from base currency. Okay, this is quoted as base. In the other side, you can always think like this. If I'm gonna short a position, I will enter at the slightly lower than currency price. You can hear bid is equal to sell. I have a short example here for you on the platform as a screenshot. Okay, so what can we see here is that in the left corner, we're gonna have at all times the ask and bid price being shown to you, all right? So as the price updates, this also updates. The median price, it's actually the current price of the asset. So your position starts slightly above or slightly below, depending on ask price. You see this little line over there, it will mark for you the ask price. And at this moment in the screen is 1.213862. And then you have a sell price on the lower line that is called bid. Let's not forget. And at this moment is it's 1.213838. This space between them is the cost of the spread, is what you are paying for it, right? If you're not able, again, about the ask and bid price, see it on the screen. I'm going to show it to you how to enable it. Okay. If there is any questions in the end, you can also talk with our support. They will help you to set it up. Basically, you will click on the setting button here on the right corner. Okay, here. And we will open this page. You click on appearance and you can scroll it down until you find information on the chart. Please make sure these two boxes are done so you can see even the ask and bid price on the charts, and then you can also see the candle information when you put your mouse on top of it. All right, very good. Limitations. Okay, everybody needs them. What do they mean? So open and close your positions are only available when market is open. Okay, so it's Monday to Friday, and you will be able to invest with the minimum of $1 and the maximum of $20,000. But this is depending on exposure. And you might ask me, what is exposure? Let's do this. So, exposure is something you might feel on the platform sometimes when you're trading. It's the inability you will feel to open a position on the direction you want, or the amount of money you want, or with the multiplier you want. Why? Because we have to balance the trades, to balance the risk for the broker and for you. So sometimes you might feel this issue, but you can also ask us in chat if it's recurrent, but it shouldn't be. Okay, so you can just try to put a smaller amount of money or wait a little bit before you try to open your position again. It's very normal to happen this when the volatility on the asset is too high. So understand that if you're having issues to open a position, maybe it's too high of a volatility, you can try again. In all currencies, exactly all assets in the platform can be exposed to this situation. Okay. I hope you guys are enjoying. Don't forget to write down your questions so we can speak by the end. All right? We're almost there. Well, halfway. So we're going to talk about pips now. This is important because this is how you're going to measure the movement of forex pair. Okay? So basically, the pip is the unity that expresses the change of prices. We call it like this, and it's always the fourth decimal after the point on the price. There is an exception, though. I will come with that after. So you see here, Euro USD, it has exchange rate from 1.1051, and the 1 will be the pip, all right? Exception will be on JPY we're going to show, but there is other exceptions too. The pipette is even a smaller measurement amount, okay, because sometimes the price doesn't move the pip, but will move the pipettes, and it always be the fifth decimal of the price after the point. You can see here GBP USD, and it has 1.30543. The 3 will be the pipette. You can know that a pipette is 1/10 of a pip, so it's really, really, really small. We have here a short example. If your position on Euro USD moves, let's say from 1.1050 to 1.1051, it means that the price rose by 1 pip, okay? And into the exception, we have here the idea that on USD JPY, but this is every pair of JPYs like this, you have the pip being the second number after the decimal point, all right? And I want you guys to maybe take a screenshot of this. If you do not have the time now, you can rewatch it. Basically, this exchange rate is a random one. We just want to show you if the price moves depending on the position where it moves, this is how much the pips it will worth. So here you say the fourth decimal is 4 pips changing, but if it moves this one, it's actually 30, not 3. Okay, pretty good. Moving on. We're going to talk about tools now, okay? Multiplier is the first one I want to talk because it's your leverage, all right? And why you use leverage? For some assets, you might not use it, but for Forex, it's very important because the fluctuation in price when you talk about currencies, it's very little. That's why we explain pips, okay? It's moving by the fourth decimal. So imagine you put $100 on euro-dollar exchange today, and it moved on your favor even 2%. That's a lot. Your return without leverage would only be $2. So that's not really interesting. You're risking 100 to get $2 as a return. So basically, what a multiplier does is give you the possibility to trade with higher volumes, okay? So this means that you are risking a small amount of money and we are multiplying it so you trade with a higher volume. That can give you a more interesting outcome. For example, if you're trading with $5 with a multiplier of 30, your investment will be multiplied by 30. So actually, you're risking $5 and you're trading with 150. Okay? We have here a setup for you to see how this works. You are able to see the amount you're going to invest, then the multiplier, and the platform automatically will show you the volume that you're going to trade. What you see here also is the pip value. So for you to understand what a pip value is that this is your return basically as the pip moves. So if it goes on your favor, you get 0.01 cent, okay, of a dollar. In this case, if it goes against you, you're also losing by pip 0.01 cent, all right? Pretty good. Can we move on? I think so. We are in a good time. Here, I'm going to show it to you on this screenshot, all of these that we've been talking about, all right? So here we have our famous Euro USD. Good. Then we have here the median price, as you know, is the current price of the asset. This is the investment amount where you put how much you want to invest, where you select your leverage. In this case, it's 30. Sometimes you're going to have more leverage to select different ones. It automatically shows you how much is the volume. And then you also have the pip value. As I said before, it's your return on your favor or against you as the pip moves. You have here the possibility to set the auto close and also to create a pending order, okay? Purchase order. This is the expected outcome. This bar is at all times on your chart, and it can show you, even after you open the position, if you have a target, let's say, of 30%, will show you where the price needs to move to you to get you 30%. Is a great indication of how to calculate your outcome and your risk as well. And this, again, is the cost of spread, how much you're paying to trade euro-dollar at this moment. And this ask and bid prices always on the chart at all times. We're going to talk about risk management tools. Okay, as I said before, we do have tools that enable you to automatically close positions, automatically open positions, because we are busy people. Sometimes we're not in the computer. So this can be very helpful to you to not lose opportunities. We're going to start with stop loss. Basically, this tool will be used to protect you against further losses. It will automatically close your position where you set it to close. So as soon as the price reaches your stop loss, the position closes. Okay? It helps you manage your losses. Basically, if you are willing to lose only 30% of this position, you can set it there. Okay, 30%, it's enough. If the price goes there, we're gonna close it. Take profit is more, it's a nicer, because it means you are in profit. These tools is basically used for you not losing opportunity to close your position where you want it to close. If you're not there looking at your computer, you can be sure that if you set a take profit of a 20%, the position will close when it reaches the price. So you don't lose the opportunity, right? It will help you lock your positive outcome. And we have to explain to you about slippage. We go in there, and it's a natural movement of the market, and all these type of orders are being subjected to slippage. All right. So trailing stop. This is interesting because not all brokers will have trailing stop available to you. It's an interesting risk management tools, and it means that is a dynamic stop loss. All right. So this feature basically will follow your profits if you are starting in a profit, and it will close when it reaches some specific distance from the profit. Okay, so I have here a small example. It's nice to understand. So we set here auto close for a trailing stop of minus 5%. But I did a good prediction, right? And this price is going on my favor, and I'm in 3% of loss. If you check correctly here, you can see that I only have 2% on auto close. So this means what? As I set 5% of a trailing stop, and I am at 3% of profit. If the price drops from there 5%, my position will close. Giving you a different example, if I was, let's say, at 8% of profit at this moment, I didn't reach my take profit yet, and the price dropped by 5%, my trailing stop will be activated, and I will still close on 3% of profit. So this tool can be very, very interesting to your strategy. Oh, I forgot the pop-ups. They so beautiful. Stop loss minus 2%. You guys can see that, right? So, last but not least, we do have this possibility to keep your position open after you are on a loss of minus 95%. This is our default stop loss, and this happens because we want to prevent you to lose the whole amount of your investment. So we have this default. But when we're trading with high leverage, let's say, and we do have this prediction, sometimes it can go against you, okay, when before it goes on your favor. So basically, you have the possibility to use your balance to keep the position open, and we will be able to keep that as long as you have funds on your balance to support this position. Okay, basically we'll be deducting from your balance from 20% of your initial investment. So let's make it a understanding. If you're investing $10 on a position and you reach now minus 95% and you want to keep them open, we will deduct from your balance $2 to add to your position. Okay, when it's added to your position, you will keep for another 10% of loss, and then it keeps adding if it goes against you. When it comes back to your side, when it gets in your favor, the money that has been deducted go back to your balance, all right? And when you reach, let's say, 94% of loss, all the money that was deducted was already recredited to your account. This goes on until you reach your stop loss that can be lower than 100%. Let's say you want a stop loss of 150, or if you do not have balance to keep the position open, all right, you have to make sure you have enough balance to this 20% to be deducted and credit to your position. And if it goes on your favor, of course, right? If you have any questions about this, please write it down on the chat and we will answer in the end. More tools. Dun, dun, dun. Purchase orders is one of the most interesting ones because sometimes we have the possibility to make very good analysis before some things happen. Okay, and the purchase order is basically the possibility for you to set up a position you want to be executed when it reaches a certain price. Okay, basically you will do a setup putting the desired price you want. So when it reaches this price, I want it to open. The investment you want to do, okay? You can also preset your stop loss and take profit before, and then the direction. I want it to go long, I want it to go short, okay? I have your example for you. So let's say that at this moment, Euro USD is at 1.19, and you do believe that if it goes to 1.18, this is a very good support. So it means that from there, the market will rebound and go up, okay? So you can sit and wait this to happen. It can happen in the next half an hour or maybe in 2 hours or 5, we never know. So you can actually put a pending order on this price, and we will open the position to you when the market reached that price, okay? So basically, we're saving you a lot of times. I want to show you guys this live on the platform. So give me a little second so I can share my screen with you. Everybody's there hanging on? Drink some water, guys. Keep hydrated. Come on. So let's go to my platform. Everybody can see my screen. All right, all right. So here, what can we see? We have Euro GBP. I'll be looking there because I have a bigger screen, so that's nicer. We have Euro GBP going on here. And you see here, we have this purchase order. And we're going to be able to set it up on 2 ways. So I'm going to show the longer way first and then the faster one. So we basically click here on purchase and we will select the price we wish. So for Euro GBP, let's say 87.09. This is random. All right. And I want to trade, let's say $200 on this. So I set it up. Then the multiplier available, I have tons of multipliers available. Remember when I said to you that you're going to have multipliers available here where you can set them on. Remember, the multipliers become riskier as they are bigger, okay? So your return might be better, but your risk to lose it is also bigger. So you can set 200. I'm feeling good today. You see the volume created a 40K volume, 40K, and I'm only investing $200. And the PIP value is 4.59. So it means that if I have pips on my favor, each pips that moves, I get this outcome. But if it goes against me, I always losing this amount of pip value as well, as long as it goes against me. Okay. Now that we did the price and where, we can also set an auto close. I'm saying 10% of profit I want it to close. And if it reaches 15 on loss, I wanted to close it as well. Here you have the button for the use your balance to keep the position open. You can also read this disclaimer, important. And if I click here, the platform no longer have the 95% set, okay? So as I click, it disappears. You see? Very good. And now I will choose the direction that I want to do. So from here, I think I want to sell it. And as I did this, my position will be created. You see here on the chart, pending order. I can go here to total portfolio now, and I see my pending order. From here, I will be able to change it, exclude it, or set up a different take profit and stop loss before it's even open, all right? Very good. The other way you can do this, easier way actually. So it's clicking on this plus sign whenever you feel the price is correct. So let's zoom out a little bit. As you can see here, this zone has a very good resistance. So its price has a hard time going forward. So I can click here, go on my plus button, okay? And it will open this, create an alert, and I can create an alert, and it means that I will be receiving a notification when the price reaches here, or I can create the pending order from here. So we restart. I close here, and I then set the amount, again, the multiplier, and I will see all of this change, and I then press sell or buy, okay? Say sell again, and my another order was created. Very good. Guys, you feeling okay? I can see your questions now. We will be answering them shortly. I just want to make sure everybody is at the right time. Very good. We're going to go back to our presentation. Well, if you wish, before going back, I can also show you on the chart. You have here the ask and bid price being updated at all times, as we said. We also have here the price of spread. Let's see here. Yes, very good. Sell, put a position. I will close this pending now. And you can see here the spreads as well. So this is the price of spread we will be paying for this position, all right? Going back to our presentation, we're almost there. I see here a question very interesting. I'm going to answer it live. Yes, the alerts are for free. You can put as many alerts as you want. We will be answering all the other questions in the end, but this one popped up to me, I found it important. Okay, we are back. Slippage makes some people angry sometimes, but it's a natural and predictable situation on the markets. So if it ever happens to you, of course you can request assistance from us, but you also will understand when it happens, because it can happen live when you're trading, or it can happen when you have your automation, okay, done, such as stop loss, take profit. So what it is, it's basically the process of filling up your order. Okay, so you see that the quotes, the quotation are being updated second by seconds, very fast, and sometimes the exactly price that you requested, it's not available. So when your order is actually being processed, that price, it's not there anymore. Okay, so you get a slightly higher or a slightly lower price than the one you requested. When does it happen? Usually on very high volatility moments. High volatility moments, it's when the price is moving too fast. So that price is no longer available when you actually press your order. Okay, or if you have very low liquidity as well. As I said before, this can happen to any type of order, and you will see when you're doing it, or if you have stop loss, take profit, buy, sell positions being processed. I will show you here on this example. Okay, we have two examples to follow. This is USD Canadian dollar. And we can see here the ask price. So it's the above line, you see? This is the price I want my order to start. And when I clicked it, the slippage might happen and I actually get the upper price. Is a price that I didn't see before. It's slightly above, okay? This is the slippage, is when you got slightly above or slightly lower than the price you wanted, okay? As you see, the slippage in this case was from 2 pips. Here we have the same example, but in the different direction. You can see the bid price, okay? And when we press it, the slippage was lower because the price moved too fast. So we're not able to get the quotation you saw at first. This also is slippage, okay? It happens on both directions. We almost at the end. Hang in there. We're getting to the questions time. But before we get there, I want to talk to you about fees and why we have overnight fees. We usually call it also rollover or swaps, okay? And this is because the interest rate from one economy to the other economy, from one currency to the other currency, are different. So we need to charge you a fee to be able to take your position from one day to the other with leverage, because we did borrow your money for your trading volume, all right? So basically, it can be positive or negative, and I'm going to show you in the platform where you see positive or negative, but it can cost you or gain on these fees, okay? Why is that? I think I told you just now, but they are charged because the interest rate between the currencies are different, and we need to charge this fee to be able to carry them. Pay attention that overnight fees has a very specific time to be charged. And if you close your position before this time, okay, you're not charged. So it only charges from one day to another, and you always know what time is going to be charged. I'm going to show this live because this is interesting, okay? So give me a second to find up my screen for you. Please take some water. I hope it's summer in Africa. I wish I was there. Oof. Let's go. Share. Just a second. Dun, dun, dun. All right. We back to my screen. And well, at least I'm not losing anything. That's good. As you can see here, I'm going to show euro dollar now to be slightly different. Wow, look at this movement. Basically, you are able to see the overnight fees if you put your mouse on top of any of these buttons, okay? And we're going to show you here on these details all the information there is to know about your position. And if you click here, this tab will open and you can see exactly what time is going to be charged from each day of the week. What is the percentage of the charge? So in this case, in euro dollar, it's 0.003%. And it also tells you how much money for this amount of money invested. So here, we check this position here is for $100, right? And I have 100 multiplier. So for this, each day I'll be paying, I'll be paying 0.28 cents. And in the Friday, because it's weekend, we charge it 3 times. So you pay for Friday, Saturday, and Sunday. So the charge is slightly higher, but you will always be able to see it here. Very good. Guys, if we have any other questions, please write it down because we're going to go next, okay, to answering your questions. Let's go back to our presentation to wrap it up. Everybody feeling okay? Thumbs up on the chat, guys. Okay, very good. Good, I see some thumbs up. To finish it up, I want to tell you these topics if you didn't get it already, but I think it's very clear why Forex can be a special asset and can be an interesting asset to you, all right? And basically, you will be you'll be available to trade so many different currencies regarding what is your knowledge, what economies you are more interested about, what do you know about them. So you can find the currency pair that's more suitable to you. There is no cake recipe. I used to say that. It doesn't mean that it works for some people going to work for you, but you can find what is going to work for you, all right? So there's no expiration times. If you ever trade binaries, you know you have to have exactly a speculation on this time. And in Forex, you don't need. You can make a bigger speculation and you can just wait until you get there, okay? Then upside can be unlimited possibility of profit regarding what you want to get and what you think it's possible, okay? So, and your risk can be from 0 to 100%. So you can always set up different stop losses. You can have a control, a margin of what you're doing. You have more time to think and to analyze and reanalyze as it goes. It's available 24/5, okay? So 5 days a week. And you have a lot of risk management tools, as we showed here, and more indicators, graphical tools that will help you with your trading. And then, again, strategies. There are so many strategies. Is You can guys read our blogs as well. We have a blog where we will explain different strategies, different indicators, and there will be other webinars to talk about different informations, different ways of trading. So you guys keep receiving those invites and coming to us, all right? So first of all, I want to thank you to hang with me this long. I know I talk a lot. Sometimes I talk a little bit fast. I'm sorry, but you will be able to rewatch this webinar, and let's go for the questions, okay? So guys, we're gonna start with the questions here. I have a question from Temple Godwin. And he was asking me if the broker collects my spread as his or her earns, and how do I make my own profit? So yes, as I said before, the spreads are a fee from the broker. Okay, so that's how much it costs for us to be able to make this asset available for you to trade, and it's a very little fee, and it's a natural. Every broker will charge you. Some brokers might have different spreads, so it's important for you to see what is interesting to you. But yes, it's a earn from the broker. How can I? Then I have another question from Kalechi Okosisi. I hope I'm saying that correctly. How can I know when to bid, or when the bid is too high? I'm not really sure, but you will be able to see the bid when you go short. Okay, so if you open a position on short, you have the bid price, and when you close it, it's going to close in the ask price. If you got any questions from this, we do have some articles on our blog as well that can help you up, and you can also rewatch this webinar where I talk about ask and bid price. Then I have Henry. And is the spreads higher at night or after the regular trading day? Well, yes, but there is a why. Okay, the spreads prices, they are related to market conditions. Okay, so when you have lower volatility, lower liquidity, as I said when we were discussing spreads, the spreads can be higher. All right, because there's less people trading, there's less transactions. So yes, the spreads at night can be slightly higher depending on the asset, because if you're trading an economy that the market is closed at the time, yes, for example, you can choose to trade assets from Australian dollar, let's say, New Zealand dollar, Japanese yen. Depending on the time, their economies are open and the spreads might be better for you than Euro USD, let's say. Then we have Mohammed Samir Shahin. Mohammed was asking me, how do you know when the market is volatile? Well, volatility on assets, it's when the price is moving very fast. If you use candles, you can see the price going up and down very fast. This indicates high volatility. There are also a few indicators on the platform that you can use, such as ATR, and it's indicator for volatility. So you show you a line and how to measure it. Okay, again, we have a blog, guys, go there. It's a lot of information, interesting. I hope I was able to answer your question. Then we have Nuhu Patrick. How can I make money? Well, That is interesting. How can you make money? Basically, the idea of your investing on forex is you're speculating on its price. Okay, so your outcome will be related to how well you do the speculation in the time frame you set and the investment amount you did. Okay, because it comes out as a percentage. So as more as you invest, more can be your outcome, but bigger can be your loss. So how to make money? We have to start studying about forex, let's say, understand your risk, and do your speculations. Start up when your training account, see how it goes for you, how well you're able to make these speculations. And don't forget the risk, huh? I'm seeing you. Now we have another question about Ernest. Hi, Ernest. Again, I spoke to you on this chat. That was good. So, what is the perfect percentage for stop or profit? Look, no cake recipe. Okay, I can't. There is no possibility to say perfect because it will depend on your strategy and how you analyze this asset. Because sometimes the price have a very good probability to go 10% on your favor or maximum 30% against you. You have to be able to set for yourself what is your target. And that's what is so special on forex, because you have the possibility to understand what is your target and wait for it. There is a few strategies regarding risk though that talk about doing some difference between stop loss and take profit. So you set it up as let's say a good range between them. These strategies, if I'm not mistaken, can also be read on our blog. Recently, they wrote something about setting up take profit or stop loss. Okay. I have a question about to disable the 95 default. It's from Joaquim. Olá, Joaquim. So we gonna show you on the platform. How does that feel for you? Because it's there and it's easier for you to see it. Give me a second, please. Dun dun dun. Where is it? Have here my platform. So coming back on the platform. Okay, I'm here at euro dollar. And when I go set auto close here on auto close tab, you can see this button here. Use your balance to keep position open. If I unlock this will be set at 95% loss. Okay, so it doesn't matter how far it goes, it reaches this price, it has to close around this price. Don't forget about slippage, okay, guys, because it can happen here too. But it goes around this price, it will close. If I want a lower stop loss, I can also edit it. Let's say 50%, okay? And if I set like this, it will make a line when I open. So my stop loss is set here, right? But if I don't want this stop loss, I want to be able to have my position open, I will come here and I use my balance to keep the position open, right? And I will apply. And then this is gone. And if it goes against me by 95%, let's say here, around here, it will start adding money to keep my position open. Okay? Is it clear? Okay, guys, you can also talk to support if these questions remains, but it's basically that you able or disable as you wish. And remember that these settings can be changed as your position is going. Okay, you can just come here and change the setup as you wish. Okay, let's go back to our presentation so I can keep answering you guys. Good. So Penina asked me, what is the monthly withdrawal limit? There is no withdrawal limit, okay? What we do have is a fee after the first withdrawal. So the first withdrawal of each month in a calendar month, you will not pay anything, okay? And then you have a small charge of 2% on all the other withdrawals you make based on the amount of money you are withdrawing. But there is no limitation. You can withdraw as many times as you want, just remembering you have a small fee. I have here also a very interesting question. Matimba is asking me how you can become a VIP, right? I'm a VIP account manager. I work with Brazilian clients. And for African countries at this moment, I believe the criterias are you will need to be trading on your platform. So we will look at your volume of trade and your deposits. We will count $800 as a deposit in the period of 30 days. Okay, it can be any period of 30 days. It doesn't need to be a calendar month, but you have to create this volume of deposit. And you also have to be trading. Okay, so if you are trading your position here, you have to create a volume of around $8,000 in 60 days. So basically, you have 2 months to trade on the platform to create this volume of trades, so new positions, and you have 30 days to create a volume of deposits. Okay, the benefits are very interesting. You have an account manager such as me that will be able to conduct some training sessions with you, clarify your doubts, help you out whenever you want, also speed up any situations you have in a platform. And in the other side, you also have on binaries and digitals better payouts and all the tournaments in the platform for free. All right. For more information, guys, ask on support. They will give you a full list. Good. We have here another question from Mikhail. He was asking me, when I'm trading, how can I set up a closing time? Okay, I'm not sure of what you're asking, but I think it's a stop loss, right? So you do not have a time frame to close. It's impossible to put, I want to close it in 3 hours. It doesn't work like that on Forex, but you can set up a price when you think should be a good time for you to close in profit or in loss, and you set your take profit and your stop loss for that price. And as soon as the price reaches there, it's going to close. Another question from Coyote Samuel. You're telling me you cannot see multipliers on the platform, right? So when I was opening my position, if you saw on the platform, I had many multipliers available to me to choose. But regarding exposure, you might not have any other multiplier to choose besides the one which is there. So keep in mind that multipliers available are also related to the market conditions. If you do not have any other multiplier to select, it's because we are only offering this one in specifically, right? Let's say Friday Akban, it was asking me, please, what are the difference between buy and sell? Well, in this case, buy and sell are the different directions you're going to trade. If you're buying, think like this. You have euro, dollar, okay? If you're buying, it means you are buying euro. You expect it to be higher in a time frame, okay? You want it to go long. So if you're selling euro dollar, it means that you're saying that euro will go down. So you sell euro and you're buying dollars, okay? euro dollar, you're selling euro and you're buying dollar. So this means that the price of euro dollar would decrease in time. So that's the difference between the buy and sell button. And you can think yourself as a real buyer. You're going there, I want to buy this currency or I want to sell this currency. And that's how you work is in theory. Matimba has another question about if multipliers applies on pending orders. Yes, of course. If you do have different multipliers to choose, they're available on that button. You can select which multiplier you want to trade with. Okay, if there's no possibility to change the multiplier, that's the multiplier that's going to be applied to your position. Then we have Sinethemba, and he was asking me how much are the overnight fees. This is an amazing question. Okay, it's important, but it depends on how much you're trading with, and then what is your trading volume. Okay, so also the multiplier will applies, and when you're gonna open a position, if you just scroll your mouse on top of buy and sell, you will see overnight, and you can see there how much is going to charge every day, what is the percentage, and actually the amount of money you're paying for it, okay, with this amount of money you're trading. So they will be different depending on which amount you're gonna be trading with. I can show you very, very quickly on our platform again. Okay, give me 1 second and we're gonna go there. So let's go platform here. So you see here the platform. We have euro dollar going on, and I have $100 as an amount to invest, and then I have 100 multiplier here. $100 to invest, 100 multiplier. My actual volume of trade will be 100,000. And when I put my mouse here, either if I want to buy or I want to sell, it's going to be showing me the position details. Okay, here you can see also all the other information. And if you put your mouse here on overnight funding, I see when it's going to be charged. So in my time zone, it's going to be charged at 10 o'clock every day. The percentage is minus 0.003%. And for this amount of money, I'm going to be paying 0.28 cents every day for this position, as long as I keep it open. All right. You also have here on Friday is going to be charged 0.83% because it counts the weekend, 3 days. All right. I hope you guys are clear on this. Going back to the questions, we're almost finishing. We did a great time, guys. Thank you for sticking around. So, Friday was asking me, how can one deposit on the forex platform? You will be depositing on IQ platform. Okay, forex is not a different platform. So as you deposit on IQ, whatever balance you have deposit, you're going to be able to use it in any asset you wish, that the ones you have available, including on forex. All you has to do is go on the tab and select forex and the pair you want to trade, and your balance is available for you to use. Moving on, we have a question from Adjet Seth, and you're asking me if the margin is the same as the pip. Okay, not exactly. So a pip is the way we measure the fluctuation in price of a currency. And why is that? Because they move very slowly. It's very difficult for you to wake up one day and see euro dollar being 1.15 and tomorrow is going to be 1.20. It happens, but it's not that often. So we measure the change of price by the fourth decimal, which is the pip. So it can actually be profitable to people and to companies and investors to trade this asset. Okay, so it's on the fourth. Margin actually is the amount of money you need to have to open the position. Okay. So no, the pip is the way we measure it, the way we count it, and the margin is how much money you need to open and to keep your position open for yourself. Moving, we have Jeffrey Obang. He was asking me how often we do these webinars. Yes. So actually, we do it as frequently as we can. We have a new project. We're going to be launching new information soon, but we want to be closer to you guys and be able to provide more and more information. Okay. So stay tuned. The invites will come to you. Moving forward, by the way, thank you. I hope you guys enjoyed. Moving on, we have a question from Omotayo, and he was asking me, does IQ Option have any bonus packages? No, at this moment, we do not have any bonus packages being offered, okay? Because we are a broker that already offers very little minimum deposit. Okay, so our minimum deposit is $10, and you have a whole range of assets to be able to trade. A lot of other brokers will offer you bonus, but they will require you to deposit maybe $500 at first for you to get this bonus, and then you cannot withdraw this bonus as well. There's so many rules in there that usually is just made to give a good marketing. Right. So here, everything it's transparent. You have your minimum invest as much as you want. At this moment, we do not have any campaign to offer bonus to our clients. George is asking me, when using a multiplier, how will the transaction settle in the event of a loss? Okay. So using a multiplier, as I said, it can make your position go faster in a positive direction for you. You can have a better profit, but it also means that we will move faster in the opposite direction. Okay, so in a situation that goes against you, it works as the same as we going on your favor. So that's why you have to be aware when choosing a multiplier. If your trading volume is too high, it means that your pip value is also high. So it means, let's say, if you have a lower multiplier, you might be losing 5 cents at each pip. If you have a very high multiplier, you might be losing $2 at each pip. Sorry. So in this case, if you are willing to trade with a higher multiplier, you can use this button to keep your balance, to keep your position open, as long as you have margin to kick it off, to sustain this position. You will have it, but be careful with the risk and train these more risk strategies on your demo account first. All right. Then we have last question from now. It's from Harper. Harper Spector was asking me, what is the minimum amount to start off trading? Advice in rand value. Okay. The minimum amount, I can only say the rule. The rule is $1. Okay. But you will have to organize yourself regarding what is the minimum for you, setting based on what is the risk you're willing to have and to do, and what is the outcome you are looking for. Because, of course, in these markets that you get from a speculation, as more as you invest, higher can be the outcome, but higher is the risk as well. So you have to set it up for yourself. Um, what is the maximum you're willing to lose for each position? What is the outcome you want to achieve in this position? And as some experienced account manager here, I have to say that this risk management has to be done before you open the position open. So you're ready, you even open the position. So you already have to have a plan. Okay. So I'm sorry, I cannot advise you on exactly an amount of money. Okay. But you will be able to set that as long as you understand the risk. But you were talking about in rand value. I can only say to you that the minimum deposit amount in rand is about 150. All right, guys. My questions finish it up, but I do see that we have many people still around, and thank you so much. If you have any other questions, please write it down. I still have time to talk to you guys. Come on. Thank you for their heart. So nice. So, dun, dun, dun. I have some people asking how they can watch this webinar. This will be sent to you in a couple of days. Everybody that was registered and watch us will receive a copy of this webinar. Okay, so keep tuned. Check your spam pages on your emails. You will receive it. So Carson is saying that he wants to know how to trade Forex. You can rewatch this webinar for your convenience and also check our blog. We have a lot of strategies there. Okay. I think we are getting to an end. Okay. I want to really to thank you all for sticking with me. That was a pleasure to making this webinar, and I hope we have more and you guys gonna come too. All right. So enjoy your afternoon and have fun. Don't forget about the risk. Okay. Thank you so much. Have fun, guys. Bye bye.